Okay, I think we can start. Um, we'll just have the others join. I'll admit them as they join, but I can already start. So let me just present my screen so you can see. Congratulations once again for getting this far in your course, no, and still getting in for the year. So congrats, and it was good to see you earlier joining. So let's do this. Again, my name is Raymond Vasquez. I will be handling these refresher classes until Friday. So let's revisit your nonprofit organization knowledge, and please feel free to participate in the chat box or turn on your mic so you can speak. And then I can just let you know that you can speak. So let's be interactive and let's go. So the current trend in practice for a nonprofit organization is one which is not driven by profit, okay, but by dedication to a given cause that is the target of all income beyond what it takes to run the organization. That's what a nonprofit is. So nonprofit organizations are often used for trusts, cooperatives, advocacy, charity, environmental, and religious groups. Many, but not all, nonprofit organizations have paid staff in management positions. Almost all use volunteers, and NPOs have no owners for surplus profits to go to, and any surplus after operating expenses are used to further its goals instead of being distributed between members or employees of the organization. Thus, they are called nonprofit. For a nonprofit organization to qualify as a government recognized and tax exempt organization, it has to fulfill conditions set out by government agencies. Okay? And NPOs often rely on the dedication of employees who believe in their cause because it's hard for them to complete their private sector wages compete with their private sector wages. On the other hand, executive salaries are often quite as high as a means of competing with equivalent positions in the private sector. And funding can be an issue for nonprofits as they often rely on external sources such as donations. Accounting transparency and accountability are essential to continuation of operations as mismanaged or misdirected funds could result in the loss of funding from both public and private sources and loss of status. So it's important for them to also have their accounting straightened up. And therefore, it's important for us as well to be knowledgeable just in case we want to be part of a nonprofit organization. Okay? So, um, what is the accounting for NPO? Is what can you remember for the accounting in terms of accounting for NPO or accounting for nonprofit organization? What can you remember? And I'll just wait for you for a bit. And you can type your answers here in the chat box. Is the accounting for a nonprofit organization different from from for the for-profit or for business accounting, or is it entirely different? Is it entirely the same? Is it what do you remember for the accounting for nonprofit organizations? As I have described the nonprofit organizations here, the NPOs here, um, I hope some memory is actually triggered to remember something or recall some of your accounting for nonprofit organizations. You're all incoming fourth years, right? Guys?
Yes, sir.
Okay, so yeah, I was right. So you had your accounting for nonprofit organization, right? Can you guys still remember your accounting for non-profit? What do you remember? Hello? Are you there?
Okay.
Okay. What do you think? Is accounting for a non-profit organization the same with the financial accounting for businesses, for profit organizations? Or is it different? Or what do you think? Okay, so somebody answered cash and other cash, non-cash assets is received as contribution. And then somebody says she remembers fund accounting. Okay, good, good. It's a good recall. How about the others? What can you remember with non-profit organization accounting, NPO accounting? It uses accrual basis for accounting. Okay. Thank you, Niven, Kristania, and Michelle. So, yeah, for non-profit accounting or the accounting for NPOs, it's essentially similar to the accounting for businesses. The notable differences, though, are the terminologies used in the financial statements, which are modified to suit the NPO's purpose and the presentation and disclosure of equity. Okay, because some, say for example, as I mentioned earlier, cooperatives will have different fund balance and statutory funds in their equity section as opposed to that of, say, a non-profit organization like a homeowners or a civic organization like Philippine Institute of CPAs. So there's still fund balance, but it's presented differently. And it's also different accounting in the fund balance, especially in the equity portion, and pertaining to different types of non-profit organizations, because there are several types of non-profit organizations, as I mentioned earlier. It could be a civic organization, could be a professional organization, could be a homeowners association. Um, it could be a corporation organized as not for profit. It's also an NPO, but it's managed by private entities, foundations, and also these are non-profit organizations. So essentially, they are having the same accounting for businesses, but their financial statements would look differently, as their presentation should be that which is fitting or suitable for the operations, and in the presentation of their financial statements should also reflect how they operate. So that's the accounting for a non-profit. Okay. So what are the characteristics of a non-profit organization? So the non-profit organizations are organized activity, private independent organizations, not extensions of the government. Okay, take note of that. And voluntary in participation, free from coerced or mandated participation, self-governing, they govern themselves and are not directly controlled by the government, not for profit distributing, okay, not profit distributing. Excess revenue is directed to mission, not to individuals or owners, and of public benefit. They provide a public good or contribute to the general welfare. So these are not for profit, and there are really people who are passionate about helping the community, helping a certain group, helping people, okay, or helping just the community. So, is there a PFRS for NPO? You still recall? Question then is there a PFRS? Or would you still remember any PFRS that's applicable to not for profit organizations, non-profit organizations? You can type in your answers again here in the chat box. Give you a minute. Are you there, guys? I'm just making sure you're still there. Okay, it's about a minute. Can I get your answers, guys? Can you just type it here? I don't have to call you. You're already in the fourth year, so I know you're gonna have to answer soon. So, can you type in your answers here, or just turn on your mic? Okay, so someone says there's recognition criteria for assets and liabilities. Okay, thank you, Rizal. Okay, so for the principles applicable to NPOs, it meets the definition of an asset or liability. Okay, recognition of criteria for assets and liabilities would be that it meets the definition of asset or liability according to the PFRS, and probable inflow or outflow of economic resources and reliable measurement of cost or other value. Okay, so yes, the recognition criteria for assets and liabilities. Okay, and measurement of asset and or liability. The initial measurement is at cost, except when a relevant PFRS requires measurement at fair value or some other value. Subsequent measurement at amortized cost under the cost model or some other measurement model required by a relevant PFRS. Okay. So again, it's important for you to know the recognition criteria and then the measurement of asset or liability. Okay. Okay, so someone said the recognition of asset or liability, yes. So for the derecognition, this is the PFRS principle for NPOs in the derecognition of asset or liability. An asset or liability is derecognized when it ceases to provide inflow or require outflow of resources embodying economic benefits. The difference between the carrying amount and net proceeds or net settlement, if any, is recognized in change in net assets. Okay, so you can also derecognize in an NPO. You can also derecognize assets or liability. Okay. Okay. Thank you for that, Andrea. Next would be the PFRS principles applicable to NPOs. So general features in the presentation of financial statements What do you mean by fair presentation and compliance with PFRS? What do you mean by going concern? What do you mean by accrual basis? What do you mean by materiality and aggregation? What do you mean by offsetting? What do you mean by frequency of reporting, comparative information, or consistency of presentation? Can you guys give me your answers? Let's start with fair presentation. What does it mean? What does it mean by, or what do you mean by fair presentation and compliance with PFRS for NPOs? You can again type in your answers here in the chat box and just read, and then you can go over the concept. But before I present the concept, just give your answers. Again, guys, I encourage you to participate so that you'll have your attention here, and you also recall some of the knowledge that you've had when you were doing your accounting for nonprofit organizations. So somebody answered here. Thank you, Princess. She said, requires the faithful representation of the effects of transactions. Okay. Thank you. How about the others? Any idea? How about the others? Are you there? Cynthia, Cristania, Edu, Elaine, Michelle, Nell, Raisa, Sina. What do you think? Okay. Andrea said, it is when standards are applied with necessary disclosures. Okay. So let's go over them. Okay. By the way, for fund accounting, it refers to the management and allocation of revenue. Okay, an organization acquires through donations, tax payments, grants, and other public and private resources. The basic idea behind fund accounting is to monitor and document the use of assets that are donated by outside parties. In many cases, donations made to nonprofit organizations must be used to pay for a specific project or purpose. Accountants involved in fund accounting keep track of the restrictions that are placed on each donation that is acquired by the organization to ensure the money is used properly. Okay? And for accrual basis of accounting, all not-for-profit organizations accounting for revenues and expenses using the accrual basis of accounting. It also requires not-for-profit organization that issue GAAP basis financial statements recognize depreciation expense on long-lived assets. Depreciation should be recorded if the assets are gifts or it arises because of donations. Work of art and historical treasures that meet the definition of collection need not be capitalized or depreciated. Okay, so thank you, Michelle. Accrual basis requires no NPOs to recognize depreciation expense on long-lived assets. Okay, so how about the financial statements of NPOs? Can you remember? So financial statements prepared in accordance with the present GAAP represent a shift away from the fund reporting to an emphasis on the organization as a whole. So the equity account fund balance has been replaced with the term net assets. Okay, so remember this is fund accounting. Okay, so the equity account fund balance, okay, has been replaced with the term net assets in the financial statements. Under the present GAAP, it requires classification of the organization's net assets based on the existence or absence of donor-imposed restrictions. Okay, so fund accounting, accountants involved in fund accounting keep track of the restrictions that are placed on each donation that is acquired by the organization to ensure the money is used properly. Because some will just receive donations and grants which are restricted. Okay, there are restricted funds. Okay. So under the present GAAP, it requires classification of the organization's net assets based on the existence or absence of donor-imposed restrictions. So, of course, since it's donation, some donations actually has conditions. If you do not meet those conditions, you could be violating the donation agreement or the donation stipulation, which may invalidate the donation itself, and the funds may be reverted, or you may be required or obliged to return the funds that you have received as a donation because you have violated the donation. Okay? Restriction. So that's very important. Okay. So for financial statements, it displays three classes of net assets: unrestricted, temporarily restricted, and permanently restricted. Any changes of these classes of net assets must be reported. Okay. So these are very important for you to know when you're doing the non-profit organizations financial statements. In the net assets portion, it should be identified what is unrestricted, what is temporarily restricted, and what is permanently restricted. When you say unrestricted, that means that the organization can spend it for operations or for any other purpose because it is not restricted. For temporarily restricted, that means sometimes or maybe usually it only awaits the date of the implementation of a certain project which the fund is intended to be used. However, permanently restricted funds are funds that is mandated maybe under the law or under the agreement that it should always be there. So it's a permanently restricted assets, net assets. And with this, it's important for you as an accountant to actually be really keen on the donation agreements or the grant documentation because it's there. When you're actually doing your not-for-profit or your non-profit organization's accounting, it's very crucial for you to actually know the contracts between the parties, the organization, and the donations source, the donor agreement. Okay, what are the agreements or what are the restrictions for you to be able to classify properly whether it's unrestricted, it's temporarily restricted, or permanently restricted. Okay? So the financial statements are based on the previous discussion in the previous slides. The statement of financial position, it's going to be the balance sheet. Okay? The statement of activities, which lists all your sources of income, usually your receipts and then your disbursements, your total cash received and total expenses paid, statement of activities, and then that would be your statement of cash flows, total money in and total money out, and then the net cash inflow, okay, and then the notes to financial statements. So what are the features in the financial statements, which is the statement of financial position? So it will report the organization's wide total for assets, liabilities, and net assets. Identified again, as emphasized earlier, as unrestricted, temporarily restricted, and permanently restricted. Okay? And for organizations, it's very important for the management to actually identify this one so they know if they have funds related to a certain project which is temporarily restricted or permanently restricted, which funds that could never be touched. They know it's there but it cannot be touched. And then unrestricted, something that they can actually use for any other purpose as the need arises. So that's important. And for statement of activities, reports revenues, expenses, gains, losses, and reclassifications or changes in the organization's net assets or change in equity, permanently restricted, temporarily restricted, and unrestricted. Okay, so the temporarily restricted funds could be reduced as the projects are implemented. Okay, and unrestricted are also reduced as the expenses are paid or other operational activities where the unrestricted funds are used. Okay. Then minimum requirements are organization-wide totals, changes in net assets for each class of assets, and all expenses recognized only in unrestricted classification. A display of measure of operations in the statement of activities is permitted. Okay. So for statement of cash flows with categories operating, financing, and investing, similar to regular business enterprise. Okay. So I assume you already know what a statement of cash flows is. And then notes to financial statements, they are accompanying notes to the above statements necessary for the disclosure purpose. So it contains all the explanations, okay, of the financial statements previously discussed, the statement of financial position, statement of activities, a statement of cash flows, okay. So your notes to financial statements contains all your explanations as to what these statements are or what are the measurement criteria that you employ and the manner of presentation and all other changes that is required for you to adequately disclose your adequate disclosure. Okay. So what are the classifications again for the permanent for the net assets? Can you recall again what are the classifications of the net assets? There are 3 classifications in the net assets. Just to see if you are actually paying attention. Yes, Andrea, one is an unrestricted, but what are the other 2? We have 3. Temporarily restricted and permanently restricted. Okay, thank you, Andrea, Regine, Michelle, and Princess. Okay. So the classifications would be permanently restricted net assets, temporarily restricted net assets, and unrestricted net assets. So let's go over them. Permanently restricted net assets is that portion of the net assets whose use is limited by donor-imposed stipulations that do not expire and cannot be removed by action of the not-for-profit entity. Thus, it's called permanent. Okay, permanently restricted. Okay, cannot be removed by action of the not-for-profit entity and do not expire. Okay, the donor-imposed stipulations. How about temporarily restricted net assets? This portion of net assets whose use is limited by donor-imposed stipulations that either expire, time restrictions, or can be removed by the organization fulfilling the stipulations, purpose, restrictions. Okay, so example, if a donor says, okay, we'll be donating you 500,000 pesos, but this 500,000 pesos can only be used for the feeding program, which will happen in say August 6th. So on August 6th, if it arrives, the time restrictions is already expired. So you can use it, and then you can also use it only for the purpose restriction, which is for the feeding program. Okay, so that's very important. So that's restrictions. That's temporarily restricted. The performance or the fulfillment of the condition, okay, allows the entity to spend or disburse that net asset. Okay, so it will now be removed from the temporarily restricted net assets. Next would be unrestricted net assets. The unrestricted portion of the net assets that carry no donor-imposed stipulations, which I said earlier can be used for any other purposes. Okay. How about accounting for hospitals? What can you remember? Can you recall in the accounting for hospitals? Okay, so silent world pa sila. Okay, so accounting for hospitals. Hospitals depend its large part on donations and grants, which often come with restrictions. And fund accounting is required for hospitals in order to maintain accountability over restricted sources. Okay, and hospitals will use normal accrual accounting methods, including the classification of cost as expenses rather than expenditures, and will not, okay, record budgetary accounts or encumbrances on the books. That's for hospitals. Okay. So there are two types of funds: general unrestricted funds and donor restricted funds for hospitals. Okay. So what is a general unrestricted fund for hospitals? Okay, so general unrestricted funds are account for all resources for the hospital which are not subject to outside restrictions and used for day-to-day operations. Okay, while general unrestricted funds are assets whose use is limited, include assets set aside by um, governing board for identified purpose. Actually, these are already restricted. Okay, these are already restricted. General unrestricted funds and agency funds used to account for fees collected as an agent for physicians who have private practice patients coming to hospital offices provided to staff physicians, and property and equipment used for general operations and other unrelated liabilities. So items in this category includes assets whose use is limited to include assets set aside by governing board for identified purpose, agency funds, which is used to account for fees collected as an agent of physicians who have private practice patients coming to hospital offices provided to staff physicians. Okay, and property and equipment used for general operations and related activities. For donor restricted funds, these are accounts for temporarily restricted and permanently restricted resources. Okay, so temporarily restricted fund and permanently restricted funds. Okay, this is the subdivision of the donor restricted funds, temporarily or permanently. And in the same way, temporary accounts or temporarily restricted funds may be specific purpose fund, a term endowment fund, or a plant replacement and expansion fund. An annuity and life income fund may also be included in this category. So, specific purpose fund is a restricted fund used by healthcare providers to account for principal and income in accordance with donor specified restrictions. An endowment fund is used by hospital to account for a trust where the principal must be kept intact and the income be expanded for either current operations or a specific purpose in accordance with grantor's wishes. An endowment may be in perpetuity or it may be fixed term or until a specific event occurs. So plant replacement and expansion fund is a restricted fund used by hospitals and other healthcare providers to account for donors' contributions that must be used to acquire property, plant, and equipment. Okay, so these are very specific for hospitals. So replacement and expansion fund, endowment fund, specific purpose fund. So just be familiar with these items. Okay. So permanently restricted funds, this is also endowment fund but differs from a term endowment fund is that the principal must be maintained intact in perpetuity and only the income may be used in accordance with the donor's wishes. So wala ka ding magagawa dyan kasi restricted ng donor yan. Okay. Counting for revenues and expenses. You still remember this? So, okay, for accounting for revenues and gains, patient service revenue, premium fees, other reporting operating revenues. These are some of the categories of revenues and gains of a hospital. Of course, there's patient service revenue, premium fees, and other operating revenues. And this is also tricky because some patients may not be paying, okay, especially if the not-for-profit hospital has some qualifications for having some patients free of charge, okay, something like that. Or maybe it's a donor-imposed restriction that I will be giving you a grant or I will be giving you a fund or a donation for this amount, but all of your patients who are members of this or who have these qualifications should be free of charge, okay, for all these, say, services, okay, for a certain service or all the services or whatever. So again, it depends on the agreement, but these are the categories for revenues and gains: patient service revenue, premium fees, and other operating revenues. Patient service revenue includes room and board, nursing services, and other professional services. Okay, if you have ever been hospitalized, these are most common. And patient service revenues typically are recorded at established gross rates as the services are provided but are reported net of amounts that are considered deductions from revenues. Okay. Patient service revenue allowance accounts are used to reduce receivables for estimated deductions from revenues as well as estimated doubtful accounts. Deductions from revenues include courtesy allowance, okay, discounts to doctors, employees, okay, could be part of the benefits of working in a hospital, and then contractual adjustments, discounts arranged with third-party payers like PhilHealth, for example, that frequently have agreements to reimburse at less than established rates. Okay, so ayan, sama yan sa mga madideduct. Okay? So what about premium fees? So also known as subscriber fees or capitation fees, revenues from agreements which a hospital provides any necessary patient services for a specific fee. The fee is usually a specific fee per member per month, and the fees are earned whether the standard charges for services are actually rendered or are more or less than the amount of the fee. Other operating revenues of hospitals would be revenues from services to patients other than for healthcare, and revenues from sales and services provided to non-patients. Okay, like a hospital has a canteen, di ba? A hospital has a food something, okay, food area or pantry area where they sell food. Those are not really typical for for a hospital. I mean, those are not required for you to be called a hospital, but that's an added service or value to your patients. No, right? The watchers are no longer going to go out to eat, right? So that's part, or your staff actually can eat in a canteen. So that's other operating revenues as well. This classification might include tuition from schools operated by hospitals or rentals of hospital space. Okay, if you have like a building of the hospital where at the ground floor you have shops, or um, if you have ever entered some of the hospitals, there are hospitals like if you go to Makati Med, like there's Dairy Queen and other food shops, okay, in the ground floor. So para siyang hotel na may mga shops at the bottom part. So all those sorts of stuff can actually generate revenues for the hospital, and that could be under the other operating revenue. So rentals of hospital space could be that, and then charges for preparing and reproducing medical records, room charges for telephone calls and television. But when you have a room, and then if you're the patient, you want to just watch television, so you want the television to have cable subscriptions. Of course, it can be provided, but it will be for a fee. Okay, and maybe telephone charges if you want to call outside of the hospital. So that's also one. And proceeds from, as I've said earlier, cafeterias, gift shops, snack bars, donated medicine, linen, and other office supplies, etc. Okay, so that's for hospitals. Next, non-operating revenues would be revenue not related directly to an entity's principal operations. So these items are primarily financial in nature and include unrestricted and donor-restricted pledges, gifts, or grants, unrestricted income from endowment funds, maturing term endowment funds, income and gain from investment, gains on sales of hospital property. So, investment are reported at fair value with both realized and unrealized gains included as part of non-operating revenue. Okay. So, classification of operating expenses. We're all done with the revenue. Let's go to the expenses. Do you have any idea what are the operating expenses? Classification of hospitals? Anyone? You still there, guys? I'm just checking. Employee or staff salaries, okay. What about the others? What do you think are the operating expenses of a hospital? Let's see if you have any idea of what the expenses of a hospital are. Guys, you there? Salaries and wages, medical maintenance of the hospital, medical equipment. What else? Okay, so these are the generally the classification. These include, but is not limited to these, but these are typical. So we have nursing services, medical and surgical intensive care, nurseries, operating rooms, other professional services like laboratories, radiology, anesthesiology, pharmacy, and then we also have general services like housekeeping, maintenance, laundry, yes, and then we have fiscal services, accounting, cashier, credits and collection, data processing. We also have administrative services like personnel, purchasing, insurance, governing board. We also have the interest, depreciation. Okay, so those sorts of things in the operating expenses. Okay, so thank you, Cynthia, Michelle, Andrea, Christina. So operating expenses and other notes. Although accounts are maintained for employee and contractual allowances, these items are not expenses. As stated earlier, they are revenue deductions that are subtracted from gross patient service revenues to arrive at the net patient service revenue reported in the statement of operations. Provision for bad debts is an expense. The difference between charity care and bad debts expense is that charity care results from the hospital's policy or providing health care to individuals who meet certain financial criteria, as I've mentioned earlier. Whereas bad debts results from extension credit. Okay? Healthcare services provide as charity care were never intended to provide cash flows. But the bad debts actually were originally intended to provide cash flows. Hindi lang nagbayad, so bad debt yan. Okay? It's not actually charity care. Bad debt talaga siya. Charity care kasi, you never expected to be paid. Okay? Pero kung bad debt yan, hindi siya nabayaran, pero you actually intended for you to be paid as a hospital. Pero hindi nagbayad. So, that's it. So, let's have this illustrative problem and let's see if you guys can answer that. So, let's have this. Tina Hospital's patient service revenues for services provided in 2020 at established rates amounted to 8 million on accrual basis. For internal reporting, Tina uses the discharge method. Under this method, patient service revenues are recognized only when patients are discharged with no recognition given to revenues accruing for services to patients not yet discharged. Patient service revenues at established rates using the discharge method amounting to 7 million for 2020. According to generally accepted accounting principles, Tina should report patient service revenue for 2020 of what? A, B, C, or D? Is it A, either 8 million or 7 million at the option of the hospital? Is it B, 8 million? Is it C, 7.5 million? Or is it D, 7 million? What do you think? Okay, Michelle, Cynthia has an answer. How about the others? What's your answer, guys? Oh, an option na yan. Andrea has an answer. About the others, what's your answer? Kristania, Edu, thank you. What's your answer, guys? About the others. Elaine, Renelle. Okay, so all of you answered B, which is 8 million. The correct answer is actually B. You're correct. That's recognized there. It should be recognized at established rates on an accrual basis. Okay, so that's 8 million. Good, good. How about this one? Williams Hospital, a non-profit hospital affiliated with a religious group, reported the following information for the year ended December 31, 2020. Gross patient service revenue at the hospital's full established rates is 980,000. Bad debts expense of 10,000. Contractual adjustments with third-party payers 100,000. Allowance for discounts to hospital employees 15,000. On the hospital statement of operations for the year ended December 31, 2020, what amounts should be reported as net patient service revenue? Answer is... Whoa. Okay. So all of you answered A. So you actually know this one. A, so this is how it's computed. Okay, 980 less contractual adjustments of 100,000 and then allowance for discounts of employees of 15,000. Therefore, the net patient service revenue is 865,000. Good, good. All right, so that's it. Okay, next meeting topics would be accounting for colleges and universities, accounting for voluntary health and welfare organization, and accounting for not-for-profit organizations, other not-for-profit organizations. So read in advance, might be included in the pop quiz that I will be doing in a start like this one I've just done earlier. Okay, let me just share you this verse for the week. They are all glad to obey the Lord's command and are ready to serve Him here on earth. When their times of duty come, they never disobey. Okay, so let's all be glad to obey the Lord's command and are ready to serve Him here on earth. Okay, whether it be you becoming a responsible student, valuing the time and resources that is given to you by your parents. Okay, or just doing your own role in helping your community as a student. Okay. So that's it for me, guys. Thank you very much. I'll see you next meeting unless you have any question.
Sir, they have recorded